We are so glad to talk to you about more money things. And we're really excited because we brought Blake back to talk about more insurance stuff. Now, Blake, this is what I've been wanting to know the whole time. This is your time. What do I need to have and what should I have when it comes to insurance in my program?
I'm going to give my disclaimer. There's no perfect answer to this.
Darn it! Secret. You were supposed to give me the secret.
I'm going to give you my recommendation, but I know if I tell you this is all you have to have and one day it wasn't enough, that's on me. That's my fault. So I'm going to put my disclaimer out there. Again, recommendation. One thing that we've seen a lot of people not necessarily maybe struggling keeping up with. If you really go back, let's say you've had your center for 10 years. What that center was worth 10 years ago from the real estate standpoint, let's just say it's $500,000. I can't tell you how many people I've seen that have kept that $500,000. Well, really, to look at the last 3 years, construction costs, material costs, everything has gone up. If you had a claim right now, you're not going to build back half your center at the end of the day. So that's one thing that has to be looked at every single year. I know we don't want to have to bump up our rates. We don't want to say our building's worth more. In reality, if a disaster happens and we have to replace it, you need to make sure you're covered right. That's probably the first thing I see a lot of times for the seasoned owners that is wrong.
Okay. So
reasonable.
That makes a lot of sense. And I would be right up there with the person going, have you seen my house? Have you seen my building?
I mean, you think about it here with us, it's no different than your own personal home. How many times are we going to the tax office, the county, so they're arguing, well, write me a check then if you think my house is worth that much. No, you're crazy. It's not.
I sold a building because of that. I said, it's not worth that. I'll prove it to you. And we put it on the market and somebody bought it for more than that. And that was very confusing. Very confusing.
Yeah.
All right, let's go to number 2 then. So the one that really everybody focuses on, and I think a lot of people sometimes get confused on, your general liability. So we're focused. We're going to show this. We're going to show our state rep. We've got the $1 million. In reality, your general liability is pretty much going to kick in if someone comes in and has a slip and fall, a parent slips and falls and sues you. Your GL is going to do nothing unless you're sued. However, if you really look at your insurance policy, injury to child is excluded. So, okay, what happens if a child gets hurt due to the teacher's fault, due to an employee's fault? Where I think everybody sometimes misses the ball, abuse and molestation coverage is what we really are looking for. And so many times I see people saying, yes, I have $1 million. The $1 million is general liability. I really dig further into their policy. They have 50,000. They have 100,000. Well, let's be realistic. If I have 50 to 100,000, is that even going to cover my attorney fees to get me in court, much less any kind of lawsuit? So that's the key I would look at. Perfect world scenario, minimum of $1 million abuse and molestation. Same thing with your professional liability. That one doesn't get claimed very often. I have seen it in the past, and it's typically due to wrong child, wrong medication, right child, wrong dosage. We're acting in a professional state, administering medication. We made a mistake. I've even seen it so far as medication being put in the wrong child's backpack, not necessarily saying the medication was even taken, but the thought of it when the parents got home to pick up a child, they saw, hey, this is Johnny's in little Susie's backpack. No, something's not right. And I think society-wise, we've become a sue-happy society.
Yeah. Oh, I'll agree with you on that one.
Okay, but you didn't mention my pet peeve, which is people who don't have insurance for when the director goes to HEB to pick up some milk because we're out and it's not time for the Cisco order.
Okay, so that's going to be the next one. That's your auto policy. On the auto side, stay away from your local agents. They're only going to give you, if you see an auto policy that has 3 numbers in it, run. That's what your personal probably has. We'll just go with numbers 100,000, 300,000, 100,000. So that's still 500,000 in the big scheme of things. But the way that really breaks down, $100,000 is the most they'll pay per person in an accident. $300,000 is the most they'll pay an injury per accident. And then you just have 100,000 for any vehicle or third-party damage that is hit. What you want is the initial CSL, combined single limit. If I have that in $1 million, it doesn't matter if I need to spend all million on injury, if I need to spend all million because we ran through a building. Those buckets aren't segmented out for different things. We have the $1 million to go any way we need to make that claim. Now, what you're talking about, Carrie, hired and non-owned.
Yep.
So basically, like you said, we all get in jams. It's not a norm, but we will send staff out to run an errand, pick up something for the school, come back. I know most of the younger generation here in Texas has the minimum amounts of liability for the state, which means they're only carrying 20 or 25,000. Well, I know in this area where you guys are at, there's a whole lot of vehicles that cost more than 20 or 25,000. So what happens is, if you have that coverage, you have another $1 million that sits on top of your employees. So if they've exhausted their limits of liability and you are brought into the suit, you have coverage. If you do not have that, you have no coverage for that. I know we were talking about it, Carrie. Progressive, for instance, huge auto insurer. That's a coverage they do not offer. So if you have that and you have Progressive, make sure you have that. And we have companies, again, all I do is childcare. I have companies that can actually add that on with the liability side. So even if I do have to place you with Progressive, I have an alternate route to come over the top and still be able to add uninsured, or not uninsured, insured, hired and non-owned through another provider.
Okay. Okay. So what if the center doesn't have a car of, like, they don't have a van because they only are an infant toddler program or a Mother's Day out? Can they
Then
still
all
get
you're carrying is, then all you carry is hired and non-owned. You do not have a standalone auto policy. You just have hired and non-owned to cover anything that happens with your staff.
Okay. So what can somebody do when they're talking to their agent and now they're armed with, this is my shopping list of what I need?
Yes.
How can they make it likely that they're going to get covered and that the insurance broker isn't going to go, not you, or the carrier isn't going to go, not you? Are there any things they should be doing to prepare for this shopping trip?
Yes. And this is one thing that I feel has kind of changed over time. You go back, as long as we've all been doing this, the rumor, the old wives' tale is everything's based upon losses when I'm out shopping, right? I haven't had a loss in 10 years. Anybody's going to insure me. Well, that used to be how the insurance companies looked at it. Now, the first thing they do, if I submit an application on your behalf to the insurance company, they're going straight to your state licensing page. The first thing they do is look at your deficiencies. That has been the biggest, and they've even gone a little bit further. So when it first started, it was more just the severity, those medium high to high claim, high deficiencies, what they're really looking for. Now they're looking for everything and looking at it on a frequency standpoint. Okay, XYZ happened on this visit. The next visit, the same XYZ happened. So to them, that's like, okay, something's wrong with management. They're geared towards they're going to have a major claim. They can't do the simple things because they keep having the same deficiencies over and over and over. So that alone, we don't even have an option for that company anymore because of that. And that's what I think is causing a lot of people to have to go into surplus lines, which is costing them more money and giving them less coverage. And it all starts with licensing.
Okay, so that goes back to, I don't remember what episode number, but we'll make sure Marie puts it in the show notes about contesting spurious deficiencies. So what we, call the ghost deficiencies, right? Nothing happened, or they wrote you up for something that they didn't talk to you about at the visit, or we've talked about it before, the sheep, saying that sheep are dangerous animals and can't be at your program. And you're like, sheep aren't dangerous animals. So go back and listen to that episode. If you don't know how to fight a deficiency that you think is completely unfounded, because licensing reps are fallible. They make mistakes because maybe they don't know minimum standards as well as you do, or maybe they have a bias. Like maybe the licensing rep who was very worried about the sheep was one of those kids who got bitten by a dog and now they're like afraid of all mammals who aren't humans. I don't know. So they
I've
might
seen it, the new ones. The new licensing reps are coming in and they're going to show everybody that they know what they're doing. And I think they're digging a little bit harder than what they probably should. But I tell every one of my customers, you like them, you don't like them, make them your friend.
Yep.
Create a relationship with them. Stay on good terms. You will save yourself so many headaches.
Yep.
Well, and you've brought up a really good one, though, from the standpoint of the owners who hire those directors, and especially if the owners don't really understand the minimum standard piece, they do understand the dollars and cents, and that's part of why they're the owner. And so to say that your deficiencies really do come back and will affect your insurance rates is just an awesome tip. So if nothing else, the reason why all of the staff need to be really good at minimum standards and they need to know their compliance and their regulations is because it will save your program money. I'm going to say this is a great opportunity. Stop doing everything virtual and, get some real hands-on training that has to do with minimum standards. I know it can be dry, so find people who do it well, ask those tough questions. But I have two questions. One, which is the insurance that Carrie and I often talk about, which is business interruption insurance.
Okay.
Followed by, what can we do? Do we have any options from an advocacy standpoint? Or is it just about, we got to deal with Mother Nature and everybody filing baby claims? Like, what can we do? So those are my two questions.
So what can we do? Are we dealing with people filing baby claims? Yes. Do we need that to stop? Yes. I still personally think, just through conversations with insurance carriers, we're at least 18 months to 2 more years into the pain we're in right now. However, I do think from an advocacy standpoint, we should be getting with our state reps. We should be going to them. And there's so many of us out there, owner wise. You have the documentation of what I was in 23 to how much this has changed me in 24. And I would tell anybody out there, if you can't, meeting with them is hard. We have our advocates that can do that. Get with your advocate, get them documentation, write letters. It's got to start there. Now, I get it. Politics, nothing moves fast. Understand. So, but even if at this point, even if it's 6 months faster than having to wait 2 years, we're getting somewhere somehow. But I think just sitting there idle is going to do nobody any good. And this goes from an agent standpoint, just like it does from an owner standpoint. I have to fight it just like you guys are having to fight it. And hopefully we can meet it before it's it's already out of control, but hopefully we can get there in a quicker time span than just sitting watching.
I have a question. What is the largest increase you've seen in what somebody is paying in their annual 2023 insurance rates to their 2024 insurance rates? What's the biggest jump you've seen?
Are you looking for dollars or percentage?
Dollars.
Okay.
Dollars, 200,000. Percentage, about 130. Now, of course, these aren't single site owners,
right?
Larger scale. But even from a single site, I've seen over 100%. So you think about it, you've been paying 20 grand and all of a sudden you get slapped with a $50,000 insurance bill. That's a huge hit financially, especially for what you budgeted not 3 months ago for the
Yeah.
year.
Yeah.
I mean,
Wow.
that's
Now,
30
is this
kids.
is
mean,
this
that's
happening all the time? No, but it's that perfect storm. We had a bad run over the last 12 months with our licensing deficiencies. We had a couple claims. Now we're having to go in the surplus market, but we need to keep XYZ coverage. We can't sacrifice that because then what we're going to do about our business if something happens. The perfect storm is what causes that. It's not, I would say on average, 25 to 30% is pretty much becoming the norm. But this will be something I had found out, and I was like, okay, I'm going to test this out. Let's see if you're telling me the truth. So I had one of the insurance carriers basically say throughout COVID hit us, kind of everything shut down, right?
Mhm.
Yep.
So what each year the insurance companies get with the state to file their rates. Then they have the ability X percentage above, X percentage below to kind of adjust those rates. But they said over COVID, the insurance companies in the states weren't talking to each other because, of course, everything's shut down. So they told me, go back and look at just your homeowners. If you don't think it from a childcare standpoint, your homeowners probably stayed flat for 2 to 3 years. Typically, we all jump up 6 to 7% each year. So what happened? 3 years of no new rates being filed. All of a sudden, this happens. We're getting hit 21, 28% right out the gate. Plus, companies leaving the childcare market space, we all got hit at once. That's where I see the biggest thing. And I tested. I went back and looked at my last 2 or 3 homeowners renewals, and they were almost dead even. So I'm like, well, okay, that makes sense then.
Yep. Okay.
Okay, well, that's a good way to think about that. As far as if nothing was changing, then they're just going to make up for it.
Yes.
Yeah.
Yep.
Okay.
Okay. Well, let's circle back to the business interruption because we keep interrupting talking about business interruption.
Okay. So business interruption, where that is definitely making a big change. So in the past, it's all you typically, again, if you're with the right company, there will be the initials ALS next to your business interruption. All that means is actual loss sustained. So there is no dollar figure. It may take your center 200,000. It may take someone else's $500,000. ALS has always been what we've attempted to get on all of our centers. Now they're wanting more of your financials to see your profit line, see your payroll. And a lot of companies are defaulting it to 150,000. Very few are leaving actual loss sustained. And then we have a couple more that will go 350, 400,000.
Well, that's not going to pay your rent and utilities for 6 months when somebody's fixing your building because there was a snowpocalypse.
Correct. So again, it's one of those things you have to have the right agent. At Elif, we understand that. Like we get it. We know we do your workers' comp. I know what your payroll is. We still want to retain our staff if we're shut down.
Exactly.
We know the cost of doing business. So we understand that's almost just an extra piece that we know we need to increase should something happen.
Well,
Now,
hopefully this isn't new to people listening, but I am going to guess that we have a pretty high number of folks who are listening who don't have business interruption insurance already. Talk a little bit about what that does, why they might want to consider that if they can figure out how to squeeze that into their budget.
so
You
with your
told me a
business,
story of a particular center when we were at a conference.
so with your business interruption, and that's what really scared the insurance companies because COVID was the test. We're all shut down. Like, what are we supposed to do? How are we supposed to make payroll? Well, the key factor of business interruption, there has to be a way to initiate it. There has to be a claim involved, whether it be a property, a contents, there has to be a claim somewhere. And that's what COVID wound up not covering business interruption because nothing happened to our building. It was fine. It was a communicable disease that got us. So I've had, and what the story Carrie's talking about, I had a customer, they're like, I don't even own the building. I don't need that. Like, yes, you do. What if something happens to the building? It's going to ruin your contents. Now we can activate our business interruption. They're like, yeah, but I don't own the building. I don't need that. I'm like, yes, you do. Yes, you do. Yes, you do. We argued about it. Finally convinced them to do it. Okay, fine. We'll do it. Sure enough, a major storm came through. Water got in the building. They're going to be out of their building for 6 to 8 months. We were able to activate business interruption because their contents were ruined to water, move them down the street to another building that they could still keep their operation going. We weren't just going to have to shut down and hope for the best. And had they not done that, there would have been no coverage. They would have been coming out of their pocket. Now you're still paying rent for your current facility. Now you're paying rent for a new one. Do you have the cash flow to do that? Probably not.
And buying a whole bunch of shelves, buying a whole bunch of shelves and books and equipment, and maybe having to buy stuff for the playground.
Yep. So even if you don't own the building, it's still something you need because you never know what's going to happen.
Yeah, I mean, we always tell about it because of Carrie's experience with mold in a building that Carrie didn't own. So this has been something we've been preaching pretty much for 30 years. And so thank you for having another story than Carrie's moldy building.
So
and the natural disasters, I mean, we have, like you said, we have them all the time, right? So we worked with programs through Bastrop fires, Beaumont hurricanes, and then, you know, frozen pipes in Galveston. So, yeah.
So another coverage I see, I don't know, it's from the education standpoint with the other agents that a lot of people just don't carry is employment practices liability. But I promise you, as a child care owner, if you ever call an attorney and the first question they're going to ask you is, do you have this? So in a nutshell, for me, as a part of management, as an owner, it's not, I had a bad day policy. We're going to come to work. We all have those bad days. And you just came in and interrupted me, and I might pop off and say something I might not should have. If you sue me, I have coverage. And not just that, it's still going to be from a discrimination standpoint, race, religion, sex. Oh, I'm a male in this industry. You pass me over for promotion because I'm a guy. I'm going to sue you. It's worth it. It's not overly expensive. For me, I wouldn't run a business without it because, I mean, me and Carrie talked about it. We're in Texas. If I say I don't like what you're wearing today, you're fired. Well, now you're going to try to come back and sue me and give me the headache. But employment practices liability is a big piece, I think, that we miss on as an industry. But yes, if I'm in a management role, I feel better. And I think your employees would feel better to have those tough conversations with employees. Because I think now our assistant director, our director, we're really catering to our lower tier employee, and we're kind of skirting around it. We're not getting direct, having those tough conversations because we're scared that we might say something we shouldn't have and we're going to be sued for it. To me, employment practices liability, I can have the conversation I need to have with you without fear that I'm going to be sued.
Okay, so I have a question. Okay. Maybe you can answer it, maybe you can't. A percentage of what that might cost. Like, what are we talking? Like
$2,000.
Okay. And then how much does employment interruption insurance average maybe cost?
So I would say employment practices would be about roughly $2,000. Again, it's all based upon number of employees. So of course, the larger the centers, the higher the price. Business interruption, it's really going to be based upon the dollar figure, whether it be the 150, the 350, the 400 or 500,000. Of course, the bigger that gets, I would say anywhere between 800 to 2,500, going on the higher end of the spectrum. I mean, nothing just unaffordable.
Yeah.
Yeah. So that's a lot of piece for, I mean, between the two of those, I mean, you're talking at most $300-400 a month. And that's a lot of piece to give yourself as an owner or a director, knowing that frozen pipes, pissed off employee, because, you know, some of us are not people.
And if we add that to that accident insurance for the kids, we have just bought ourselves so much more confidence in
Mhm.
handling situations, because you're not worrying about when a kid gets hurt, calling the ambulance and sending one of your employees in the squad with the kid, because the emergency room and the squad is going to be covered. And she didn't train me exactly what I needed to know about being in a squad, and I felt uncomfortable, so I'm going to sue them because that wasn't one of my duties in my job description. You've got both of those handled by just adding those two little pieces.
Mhm.
Absolutely. All right. Anything else, Blake, that we need to make sure that these owners at least and directors at least have a little bit of a hint to know to ask?
Yes, last one, your umbrella. So that's been a big change lately. So now, and it could have been you just renewed, you kept the same company this year as you had last year, but now the abuse may not sit under your umbrella. That would be a main question I want to know if I'm purchasing an umbrella. So basically, another $1 million to sit on top of my abuse, my auto, my other coverages. Will it sit over abuse now? And a lot of times the answer is becoming no. And some of the larger centers, even, they may have that $5 million umbrella. There's been a couple of insurance companies that have taken the stance, we'll give you the 5 million umbrella, but only $1 million of it's going to sit over abuse. So the question I'm asking my agent, does my umbrella sit over abuse and molestation?
As a person who testifies as an expert witness in lawsuits involving childcare centers, I will tell you that that's $1 million is going to be what you need at least, because some of these cases take a long time, and that's a lot of legal fees.
Yes.
Even if you did nothing wrong and none of your employees did anything wrong. I think sometimes we get caught up in the fact that, well, we didn't do anything wrong. That doesn't mean that people won't sue you. People can sue you even if you didn't do anything wrong.
And sometimes the insurance company is just going to go ahead and settle and pay out versus dragging this thing on, like you said, for 6 months to a year, because they're going to look at it from the standpoint of what's my legal fee bill going to be versus if I just settle it today, whether the insured was in the right or wrong. They're looking at dollars and cents. What's the cheapest way to get out of this?
Yep.
All
Well,
right.
I think
Blake,
you've given people a lot to think about. Their heads are probably exploding just a little bit, but if your head is exploding a little bit, it's okay. Take a pause. You can listen. Send this to yourself in a snoozed email or schedule an email. Listen to it again in 2 weeks so that you can process it and then listen to it again.
And if anybody has
Definitely
questions,
one
call
of
me.
those.
I have lots of people out there that I talk to from an advice standpoint. That's not even necessarily my customer. I'm here more from the education standpoint. If you're not getting what you need, call me, shoot me an email. I'll answer your question and help you the best I can.
So his
absolutely. Go in
contacts are
armed
in
and
the
ready.
doobly-doo. They're in the doobly-doo, also known as the notes under the episode. I
All right,
didn't
so
come up with that phrase. That's not me. I stole it from somebody else.
I think maybe it is. Uh, so absolutely make your list, go back, listen to it again, take all those notes, because we've given you and we've told you what you need to have. We've given you ideas of what it should roughly cost. If you're not really sure, go look up Blake's info in the show notes. Reach out to him. If worse comes to worse, find us. We'll connect you to Blake. Kate at Texas Director, Carrie at texasdirector.org. And thank you so much. And we look forward to talking to you next week.
Okie dokie. Bye-bye.